The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex.
Let's go to Scott in Colorado Springs. Hey, Scott, what's going on?
Good morning, guys. How are you?
We're doing great, man.
I want to thank you for bringing this Nadex platform to our attention.
Oh, cool.
It's one of the most powerful things that I've seen.
Yeah, it is certainly a platform that not only is neat, but what's so sweet about it, folks, if you haven't tried it out yet, is that when you put your trade on, that is your stop. So what happens is this. Everyone's excuses all the time is that I moved my stop, I didn't put my stop. Well, that is your stop.
Yeah, exactly. I mean, it's perfect. You can set your trades and go do something else.
Now, Tom O'Brien and Steve Rhodes.
And Darrell Martin. Welcome, folks. We want to appreciate you growling and prowling out here with us. Right now, you get the Dow Industrials up 33, Nasdaq's up 17, S&Ps are up 3.5. We get gold down 10.70, silver's off 27 cents. Bonds getting smoked. They're down 1.5. We get King Dollar down 26. Euro is up 87, trading at the 134.65 level. And, of course, Apple is at the 450, and that little baby, folks, is going to have some big problem. Morning, guys. What's going on?
Morning.
How you doing?
Feeling pretty good.
Good, man. Listen, folks, you can come over to our website at TFNN.com, and you're going to see the Nadex banner in the top and the side. You can hit that banner. You can bring up an account. They'll put $25,000 of funny money in it, and as we're walking you through exactly how this works, you'll see just how dynamic that platform is and the vehicles inside that platform. If you happen to be in the Colorado area, folks, Darrell and myself, we're going to be out there next Saturday morning. Nadex is sponsoring a workshop. It's at the Tech Marriott, at the Tech Center. It's the Marriott at the Tech Center. It's going to be February 2nd from 8:30 in the morning to noontime. Come over to our website at TFNN, and you can sign up and with Nadex sponsored. You're not only going to get a great education, but they're basically giving away quite a bit also, including 10 ounces of silver. Darrell's analyzed 5 of those, 5 time in the trade, 5 gold reports, and 5 market insights. So, we take a look at this market out here. What we're looking at is that you have, let's say if we go over to Apple first, because what is a field day here, folks, is this, is that you have Apple came down with monster volume yesterday. They're going to give some hope to the Apple fans out here, but the bottom line, I suspect, well, it's terrible, isn't it, man? I mean, yeah. it really is. The shame of Apple, folks, and I'm just seeing this, I was thinking about this morning, I've seen this so many times in the last 30 years in the marketplace, that you have such an expansion of price and people don't take their money. It's just amazing. It's like, and well,
I mean, the dreamer, the guy that made it happen, you got to take that into account. A lot of people just kept going,
Yeah, there's no doubt. There's no doubt about it. So, Darrell, if we take a look at your analyzer, right? Let's say that I'm bearish the Nasdaq in a big way, okay? And what I love the idea of that the Dow keeps going to highs. But if you listen to the program yesterday, folks, I was explaining that there's 6 different Dow stocks that they actually put in the Dow Industrials. So that's a whole different dynamic. That's the Ibison chart. That's like, okay, are you really at highs or not? But let's take a look at the NQs at this particular point. So if we're looking at if you go over to the Nadex platform, folks, you pull the baby up, and what you're going to see, if we wanted to basically do a short position right now in the Nadex platform, Darrell, using the NQs, what would be the best trade at this particular point? And I'm saying that the NQs are going to go down once again to 27.21, and we're at 27.35 right now.
All right, so I moved down to 27.21. You want till end of the day for it to move there?
Yes.
Okay.
Well, we can do 2 different things. Let's see, it's 10 o'clock. Yeah, no, end of the day. Because what happens, folks, on Nadex is that you have them that every 2 hours also, but this one here would be a daily.
Right, yeah. So we have one that expired in an hour, one that expired in 2 hours, one that expired at the end of the day. For end of the day, then let's see, 27.20. Trying to find the best trade set up. We have a right here, that's probably going to be your best trade. It put you short at 27.34, so not bad, right where the market is right now.
Oh,
okay.
That's huge. Yep.
Okay, so let's do we're going to look at a 4:15 expiration. That's going to be the actual daily. Yeah, so it's going to be the daily. Okay. And it's going to be the 27.60, 26.60 to 27.60.
Okay, 27.60. Okay, so what happens here, folks, is sweet, is that you're going to see, so you're 27.60 to 26.60. Okay, so, and we're at 27.34 right now. So what happens there is that you have 26 on the upside, and bottom line is that you got, what, 40, 73 in the downside. And what would that cost me right now?
Right now, about $28. So.
Okay, so what happens there is that each and every, and the spread right now, I'm sorry, you know what it is, I don't have enough screens up here right now. So the spread on that, what am I going to pay spread-wise?
You're going to pay $27 for the spread. So
yeah, no, I understand.
Oh, you mean bid-ask spread or you mean premium?
Yeah, premium.
Premium? It's not bad. You're 27.33 on the bid right now, so you're only going to be like half a point off where the Nasdaq's at.
That's sick. That's sick. So you'll see, there it is, I got it. Okay, cool. So what you'll see there, folks, is that the correlation kind of goes, well, it does go like this. For each and every point, whether this goes up, down, or all around, the top side of that is saying, okay, you get 26 points, 26 ticks, which if that was a full E-mini contract in the Nasdaq, that's $20. And in this particular case, it's not even, it's, you know, your risk versus your reward is pretty dramatic, man. Particularly because what we also have inside the NDX 100 is that when you look at Apple went down in volume yesterday. It's going to go right after the lows again. And this is the sickest part of it, because what you still have is that you still have approximately a 14% weighting structure inside Apple. Now, all that has to happen, and for the Nasdaq to pull lower, is Microsoft to go. Microsoft right now is up 39 cents because what you do have is that Microsoft is a very large weighting inside the Nasdaq. If Starbucks, which Starbucks is up good right now, Starbucks is up 239. That weighting structure inside the Nasdaq is also a decent weighting, and if that gives it up in price at all, you're going to see the Nasdaq pull back very quickly. So it's going to be wild.
And Microsoft, all Microsoft is doing right now is just testing that downdraft, that gap down from November 12th, November 13th, when it came down with 131 million shares. So it went up and actually tagged that area. The top of it
I love
is 28.21 is the actual low, and it got up to 28.23. And volume, pretty decent volume so far, 27 million shares in 45 minutes, but it's going against that day of 131 million shares.
Right, and it looks like, hey, good morning, Steve, man.
Good morning.
How you doing, man?
Good. Yeah, so, it should fail here. It's just coming up and testing, the breakdown area.
And what it had to do, just what Steve's saying, folks, it had to actually, because we had decent volume up at the high yesterday, you had to test that high, and we did. That's what it had to do.
Yeah, it did have some good juice in it.
No doubt.
Now, how about bonds? I don't see a trade setting up just yet in bonds, but we haven't. I'm taking a look at just the 30-minute chart, and it's testing the high volume low down from January 4th out there
with lighter volume, by the way. Yeah.
Yeah, on lighter volume. So I think you might have the 10-minute chart up. I didn't know if it was doing the same thing.
I did. Okay, so let's put this up, because right now, folks, you're 254,000 contracts. Well, you're going at the 508. And let me put this up. So what you do have is this, is that you first, this is going to be interesting. So 10 minutes ago, that is the low, the high volume low at 144.09. We did 22,000 contracts. So what you want to see is that you want to see that get tested one more time, folks. Not tested yet. That's on the 10-minute, okay? On the daily, it looks like you're going to, number one, have lighter volume, but now what you need is a rejection of price at the same time. So this is going to be wild watching this shake out, particularly because if we do go over to the gold market and you do that correlation, bottom line, gold started down yesterday, had the juice as it started down. Today, the juice isn't that bad. On a Friday, however, the destruction can be pretty intense. And most of the time, what you see, folks, inside the gold market, the thing comes out of nowhere. I mean nowhere. It's like, you know, you'll see 5 or 6 sells within the day, and each one of those sells get dramatic. So it's like, it's almost, you know, it's interesting that the gold futures trade like the small cap futures. You know, they go steady, 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 then either boom, one way or the other, and it's pretty intense once it happens, no doubt.
Now, a trade setup that I like, so when we came on the air at 9 o'clock this morning, I gave out really 2 trades. One was shorting the ES Mini,
okay,
and the other was taking a look at, and knowing that we were doing the Nadex Bull Bear binary option today, just so that early on I could identify a couple of trades that were setting up as we were coming on the air. So, and the second trade was on the U.S. dollar Japanese yen currency pair, which, you know, has been on fire here. Had a big day yesterday, big follow through as well today, but is stretched, making on a 30-minute chart, making a 1.272 butterfly. And what I told folks is I said, if I was setting up both sides of the trade,
yes,
and what I said is if the U.S. dollar Japanese yen closes below, on a 30-minute bar, closes below 90.86, it's at 90.84 right now, that to me that was a signal to take a short trade.
Okay.
Likewise, if it got above the 91.18, it was going to move higher into probably the 1.618 expansion of swing points. So this is, and we did I believe last week Darrell and I did a euro U.S. dollar currency pair trade, and that worked out great on Nadex as well. Intraday we updated people at around during Darrell's show at around 1:30 or so. So the U.S. dollar Japanese yen currency pair looks like that's setting up for a nice trade, and it ought to just at least pull back to, you know, just the dead cat bounce to the 0.382 level, which would be good bread because it would take it down to about 89.99. So take it to 90 cents. That'd be 85 ticks. That'd be a heck of a move. But and I love the Nadex platform with regard to the currencies. You know, being able to trade the currencies. It's great for that. Really great for that. Yeah, so that was one trade. Go ahead.
No, I was just going to ask both of you. What, you know, because what particularly vehicle, is there a certain vehicle that you like trading on that versus you know, the indices and
yeah, I've liked the yen, you know, U.S. dollar yen and the euro.
Yes.
Just because you're doing it now, it's tougher to do on a Friday,
right?
You know,
right.
but you know, on the currency pairs. But what it does is it sets up the pattern set up real nicely on it, and the pattern set up nicely, and then using Darrell's scanner, which is so cool. I mean, what a great product. You're able to more easily identify the trades that are going to give you the best reward to risk out there.
And what is interesting, right? Because inside the currencies realistically, even if you're just trading the currencies, that's where you could lose the most amount of money the quickest too, right?
If you don't have stop protection in place, you're in big trouble.
Yeah. You stay right there, folks. Darrell Martin, Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, we get the Dow up 40, Nasdaq up 17, S&Ps are up 3.5. We're going to be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour with your hosts, Darrell Martin, Steve Rhodes, and none other than Tom O'Brien. Tom taking about a 10-minute break here to go bid on a piece of real estate. So he'll be joining us back in the next segment, depending on whether or not he got that property. And, folks, if you haven't had a chance to check out the white paper that Tom put together, go to the homepage of TFNN.com. On the front page, under breaking news, you'll see the white paper, the bull market in real estate. Go ahead and download that if you've got an interest in maybe taking a look at some of your retirement funds, your 401k funds, buying cheap assets, buying at lows and selling at highs, and you are a qualified investor. Look on the homepage of TFNN.com. Over on the right-hand side, you will see the Tiger Real Estate Opportunity Fund. Click on that. You get all the details and information there. So before we went to break, Darrell, Tom, and we were taking a look at a trade setup. Of course, this was at 9 o'clock in the morning, knowing that we were going to be doing the Nadex Bull Bear Binary Option Hour, and that way at 9 o'clock this morning, as I kicked off the Trader's Edge, was able to give 2 trades out. One was on the ES Mini and going short the ES Mini, and the other was on the U.S. dollar Japanese yen. And that way you knew it. And what's nice about using the tools and the systems that we use is you're really planning your strategy out ahead of time, and then it's really going ahead and taking Darrell's analyzer system to identify the best possible trade that is out there. So at this stage, I would take a short trade on the U.S. dollar, Japanese yen. I'd be looking for it to move down to about 90, 89, 99, somewhere right around there. Darrell, I don't know if you had a chance during the break to find a trade set up that would be out there.
No, it doesn't take any time at all. So with a scanner. So U.S. yen, sell, and let's see here. Best trade. Let's see, our take profit again real quick.
Right around 90.
Okay, 90? Oh, okay.
Yeah, right around 90. Not that.
For 90, then we're going to go with the 3 o'clock expiration. That's a dailies, okay?
Okay.
Daily spread.
Okay.
And we're going to sell the 89.40, 90.90.
And what was the reward risk on there? Show folks how you did it.
The trade is $20 to make 130. And we'd actually make at 90 even. Let's see here. We'd make 73 on a $20 risk.
Okay. Well, that's good. That's a nice trade. Folks, when we trade the currencies here, my preference would be to look for these same patterns. They're out here all the time. And as far as what I was looking at, really a combination of factors. It was the 30-minute chart that I was first looking at. I'll go ahead and I'll pop that up on the screen here. Number one, taking a look at the 1.272 butterfly expansion. Yes, it made it just a little bit over that area, but it also gave me one of these TD combo 13 indicators out there, and those are often reversal areas. Those are either reversal areas or what they are is they tell you that a strong trend is underway, and that's why at 9 o'clock I was able to give both sides of the trade. If it traded above the most recent swing point as we were coming on the air at 8:30, then I was ready to take a long side of the trade and was waiting for it to get below the price point of 90.86. And so for me, it's a matter of the market is always providing us with information, and it's a matter of then identifying the lines drawn in the sand there and then taking your best shot. This is not about my opinion. It's not about trying to sell the top tick or buy the bottom tick out there. For me, I would rather wait for candlesticks to give me signals that the trade has a higher degree of probability. Just what is the market communicating? What are the bulls and bears communicating? Doesn't mean it's going to work out, but it is. I find that it is the better way to trade out there. And in the case of the ES Mini, and I'll switch over to the ES Mini chart, that was just a 10-minute chart, and this was one where we were taking a look at yesterday. It was really the same thing. It was identifying, this was during the 10 to 11 o'clock show, and was showing that as price moved into the overbought condition, which it did at 10:10, said it has to either move sideways to lower. Well, what it did was it actually moved higher. That was the most bearish thing for the ES Mini to do. It moved higher going into 11:30 with a weaker relative strength. You have divergence. When you have price divergence and relative strength divergence, that is a beautiful signal. Now, you got to wait for the actual reversal candles to set up, and that's what it did by 11:50, and then it moved back to where it normally should move back to. It moved back to doing 100% move of a move. Well, we had the same trade set up coming in at 8 o'clock this morning. In fact, I normally send my newsletter out around 7:30, 7:45. I waited specifically to 8 o'clock so that I could give subscribers the short-term trade on the ES Mini, going short that trade out there. 877-927-6648. We come back, we'll go to Mark in Fort Collins, Colorado, taking a look at the GDX. We'll be right back, folks.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour with your hosts, Darrell Martin, Tom O'Brien, and Steve Rhodes. And let's go out to Fort Collins, Colorado, to Mark. Mark, thanks for calling. Thanks for holding. How are you today?
How are you?
Excellent. Excellent. Thanks for asking. You wanted to take a look at the Market Vectors Gold Miners ETF, the GDX. Tell us what it is that you're doing and how we can help you.
I'm actually kind of comparing that to, like, the oil sector to figure out whether to go short oil or long gold. But I was kind of doing a little look at the weekly chart on the GDX.
Okay.
And it was interesting. I was counting from the lows of May of 2012, which is the 39 to 42 range, 43 range. See that week?
Yes. Yep.
127 million shares traded.
Yes.
So it's interesting. You count 19 weeks up to the very peak, which was September 17th week. Mm-hmm. And then you go 19 weeks back to where we are now, and we're pushing into that that week of May with about half the volume. I know this week's been a little. Isn't this just a 4-day week? Did we trade on Monday?
Well, so no. So no. Look, that's good. Now, so what what we're taking a look at, folks, is we're taking a look at that May 18th swing point. So Marcus picked out the swing points beautifully here, and one of the things that you see, it is a high volume low on a weekly basis, and that says that it wants to get tested. Now, it was tested. The bottom of it, when you see high volume lows, what you really like to see is you like to see the low of that tested. And that low hasn't been tested. That's that 3908, 127 million shares. And any time that on a weekly chart, daily chart, when a market closes inside that area, that's what it's doing this week. Right now it's at 4212, and the top of that swing point is 4281. It's coming back with lighter volume. That's the good news. The bad news is it's going to close, likely going to close inside that swing point. And so what you need to do is you would need to let it go test the bottom of that if you're trying to, pick a low entry point. Now, what you can do is, and you also, in my opinion, you want to wait for some bullish signals. The last time that test occurred was as it was coming down into July 13th. Well, July 13th of 2012 came back with 77 million shares, closed inside there, did not give you a bullish signal, stayed inside at the following session, with 44 million shares. That was nice because you had volume lightening up the week of July 20th out there. Still stayed inside the session. It was that session afterwards, Mark, that July 27th level, that gave you the actual signal, because what it did was you had a bullish engulfing candle, and you closed back outside the high of May 18th, which was 42.81. During that week, you actually closed at 43.13. That was your signal to go ahead and take a long trade, if that's what you're looking for. You don't have any such signal at this stage.
I mean, it would almost have to get above that 42.80 bar from May and do it with lighter volume by the end of the day today. Otherwise, you stay out until next week and check it out then.
Yeah, absolutely. And if you take actually the daily chart says, because I went to the weekly because you were looking at the weekly and pulling that apart. The daily chart says no. Right. You came down with volume yesterday. That came with 25 million shares yesterday, and that's starting to come into really go back to the May 15th swing point. That has 24 million shares. The daily says don't even touch it.
Okay, now do you have time to look at the XLE?
The XLE, yeah. Well, you mentioned oil, so was it the XLE that you were looking at, or was it oil specifically?
The oil stocks versus the oil. And it looks like same thing. XLE is coming up into a swing from, it's actually September and way back in almost last time this year, February. And it's coming in with, the volume's okay. It's not great, but just wondering what your thoughts
Well, what it did do, started moving up with decent volume on January 18th. But the key is going to be, you're still trading the XLE, so really the same thing. So, what we're taking a look at here, folks, is really the same set of principles, in my opinion, that you should use. And so when you take a look at that XLE, you're looking at the September 14th swing point, but you're still inside it. And the top hasn't been tested. Your better trade setup is going to be a test of that 77.35 and it's only gotten up today. It's gotten up to 77.05. It has 2 million shares, so it's got light volume, is what it looks like. But you'd really like to see a test of 77.35 before you would go ahead and pull the trigger, or especially as it's trading inside the swing point. If it closes back below the low of the 14th session, which would be 76.02 on lighter volume, you could initiate a trade then.
Okay, that's what I was kind of thinking, too. I just wanted to get your thoughts. Great.
Yeah, absolutely. Hey, thanks so much for calling.
Thank you. Bye-bye.
Have a great day. Let's go to John in Philly. John, you've got the tag team. You got Tom, Darrell, and myself on here. You've got a question about Nadex.
Greetings.
How's it going, man? How's it going, John?
How you doing, man?
Hello. And Darrell, I'm well. Hope you all are the same.
Absolutely.
I wanted to call in. Darrell, by the way, I just have to compliment you. You are a skilled trader and have come up with a real nice invention. You probably shared this previously, Darrell, but I would like to ask you if you could just share what your background has been prior to becoming a trader using Nadex, just so I can understand the sorts of things you did and how you were led to where you are today.
Well, I was basically mainly self-taught. I don't have a finance degree or anything like that. All my degrees are actually arts degrees. So,
that makes you a better trader. That makes you a better trader when you have art degrees.
I had one math class. I have a bachelor's and I have a couple master's degrees, but I've had one math class in all of them. But
the reason is because you get the rhythm of the markets.
A lot of times the finance guys, man, they get stuck in the wrong details. But
exactly.
And I got into trading and got interested in it. I actually started out in options, and that was actually what allowed me to quit my job and become a full-time trader. And eventually then I started digging into Forex, and that was a little rough to begin with. That leverage was pretty insane, and so I did really well, and I lost, and I did, it was this back and forth, and so I backed off on that. I dove into the futures markets after that, and that's where I really started just loving trading. Because I found out that's where in my opinion, that's where the money is, because the leverage is so high. But of course, that leverage cuts both ways, and so your discipline has to be insanely on target, or else you'll wipe yourself out. And as I was just digging through stuff, I started figuring out this certain, patterns and trends, and I started looking at, I'm a big gatherer of information, okay? I like gathering a ton of information, but I don't just want it. I want to okay, if it's useful, what do I throw out, what do I keep? And I'll read sometimes 5 books, 10 books a month, whatever. I just go through and just constantly gathering and, seeing if there's anything valuable out there. And one of the things I noticed as I was going through my trading, career was, people had all these different ways of looking at the market. That's where the diagnostic thing, the fundamental, technical, seasonal, and statistical. And so I started working on how can I combine all these pieces together so I can start looking at how they look at it. And when I put it together, all of a sudden things started lining up. Things started making a lot more sense. And when Nadex came along and I found out about Nadex, I was like, this is perfect. I got options. I got Forex. I got futures. I got leverage. I have less risk. And I dove into it and spent this month, just day after day after day, going through it. And then started hiring some programmers to start getting, because I found out some issues and had okay, well, I don't have time to analyze all these spreads. I want to take my trade now. And sort of this, grew through that process. But, I had to learn things like, risk reward and, what's sort of funny is once I got into Nadex, it was, okay, don't risk too much money. That's pretty simple. You just, set your cap on, either per trade or per day. But then the next goal became profit management. And that's really where the statistics came in on the deviations, because they let me know exactly where I'm going to take my profits and everything else. And, like today, the NASDAQ trade, the chart that we have up there, hopped on, we went and we sold that, when I posted over there in the den, we sold it for 90 and bought it back at 70, 200% return on investment in about 15 minutes. And, we weren't guessing. We weren't just randomly going. I had statistics in our favor. We had deviations in our favor. We had technical analysis. There's a lot of different things lining up. And, you have 3 different traders that look at the market in 3 different ways, all saying short. And so, okay, so we got the good analysis, we put it together with the risk reward, and it just becomes a nice, perfect little picture. So, I don't know, I love it. So you can have a bad day and never a bad day in Nadex, which is what I love.
Thank you for that background. Is it, do I understand in my own mind then correctly that your creation of your diagnostic trading tools, you approach being a sole proprietor using Nadex as compared to being a guy who was in a larger financial organization coming up with this stuff?
John, I think where you're going, okay, is that so let's talk risk reward. Let's talk, okay, because as to, where you're going, meaning whether you're trading equities, options, futures, this is where Nadex works beyond belief. And, I know you're a futures trader, and, the first time we came out with this, Larry was saying, well, who's on the other side of the trade? The bottom line is that if you're trading futures on a daily basis, you can, once you understand what that spread is, and that last spread was only a half a point, it makes no sense to put an option, a futures contract on, because the risk versus the reward is just not there, okay? Now, that's on the daily. On the weekly, it can get different because it depends whether you, as a personal futures trader, want to give up 2 or 3 points. You see what I'm saying? On a weekly basis. But as to where it's at in a foundational trading vehicle, I would say that Nadex is at the beginning of its lifespan, and what you're going to end up seeing is you're going to see many futures traders that want to do the work, and what I mean by specifically doing the work is doing the spread work. And I think where Darrell has a huge advantage, and anyone out there that has traded options, folks, and understands what the spread is and what the premium is in options, absolutely has a huge advantage, because you have to always be cognizant of what that spread is. But it's easy. All you have to do is basically, think about it for 3 or 4 days and really get it down. Because once you get it down, it makes no sense on a daily basis. It just doesn't, okay? Because you'll see how the bread comes in.
Tom and Darrell, I appreciate you both sharing those details. The reason I asked the question is looking, from my personal understanding, the answer to the question for me, do I, and if so, how do I incorporate those tools into what I already do? So that background is real helpful. I appreciate you addressing it.
Cooking, brother.
Thanks, man.
Have a great one, man. Have a safe one. Darrell, there's no doubt the understanding and it, folks, doesn't mean you have to, but you first having understood options upside down, I think makes a huge plus inside the Nadex product. You know what I'm saying? Because when you first look at it, it's like, okay, so how many points am I giving up? Is it a half a point? Is it 3 points? Is it 4 points? And I can tell you this, folks, as a directional trader, meaning, intraday, my take is that all intraday traders will migrate to this platform, because what also ends up happening is that the more traders that are on there, the spreads come down even more dramatically. So it's going to get interesting watching how this plays out. And I've been around long enough to remember, everyone understands now the CME is a monster, but I was at the Chicago Board of Trade when all the traders were basically upstairs, and it was a little tiny place. And it was when I say a tiny place, it wasn't tiny, but the bottom line, folks, is that it was nothing like it is today. And I'm talking about, I'm only going back about 15 to 17 years. You're not going back a long time here, man. So it's kind of interesting to see how derivative markets have basically got much larger, and they're going to get much larger, because what ends up happening is that you can basically trade with a lot less risk. That's what it comes down to. If, in fact, you're not blowing your brains out, taking much larger trades than you should be taking. You can see Apple right now, folks. Apple can't handle it. And it's going to be interesting to see as we go through the day out here just what kind of action is going to stay on Apple. Because let me tell you something. Owning Apple going into a weekend is problematic. It's bad enough owning it overnight these days, but going into a weekend, whole different ball game. Gold again is taking it on the chin, man. And this, what it says equity-wise too, by the way, folks. If you're in that market, we are going back. An Eagle broke the lows yesterday. It's following it up today. We're going back all the way to this August of 2012 level. So that's screaming. And it's like deviant. It's all of the above. This is Steve Rhodes, Darrell Martin, Tom O'Brien. We appreciate you growling and prowling out here with us. We have the Dow right, industrials right now up 20, Nasdaq up 8, S&P's are flat, gold's down 12. You get bonds off a 1.5. King dollar down 18 ticks. We're gonna be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. Don't forget, folks, Mr. Steve Rhodes kicks us off each and every trading day, 9 a.m. Eastern Time. We go from 9 to 6. You can get all that programming, folks, right on your cell phone. Inside that browser, you put TFNN.mobi for the audio. If you want the audio plus the video, just go to TFNN.com. On the right-hand side, you'll see the box with the 3 phones. Hit that phone. And, of course, don't forget, Darrell has his own program, 1 to 2 Eastern Time, each and every day. And market-wise out here, it's going to be interesting, no doubt, coming into this weekend because, the NASDAQ is basically going to drag this baby down, yelling, screaming, crying, all of the rest. You know, it's interesting when we just had that call from Colorado, Steve. That XLE, yes. Man, I love that setup on that XLE, man, to basically get my shots on.
Yes, absolutely. Just got to be patient. Got to be a little patient, and then obviously, as we tell folks, it's as simple as also going over and taking a look at ExxonMobil, Schlumberger, and Chevron. Right. Just those 3 alone are about 30 to 40% of the XLE.
Yeah, no doubt. No doubt.
You know, so you can get it. You know, I noticed Google here. You know, the Qs have held up rather well at this stage. So it's kind of like, okay, where's the tumble going to start coming from? And you know, Google is clawing its way back to the top of that downdraft area.
Yes.
So that's getting pretty close, and you know, it even has a little bit of a breakdown or gap from October 8th out there. So that thing may be getting ready too.
Well, and you know, it's interesting. So. Watch this, and this is what you know. The NDX 100, folks, because it's a modified weighted capital index. Rango Resources right now. That's the largest mover downtown in it, and these always come out of nowhere. And it's interesting because you know I follow Rango. I know Rango upside down, and 2 days ago, great expansion on you know upside. But guess what? That wasn't even close. It didn't go to a swing point. You know, Rango wants to run back to this 89 area, and right now you're at 94, you know. So it is interesting inside that context, inside that index, rather, once something starts moving. Like Altera is the third one. Altera wants lower price. And right now, even with Apple, you know, Apple's down $4, but Apple's the fourth equity bringing it down. It's not bringing it down the most just yet, you know. Now, if that starts accelerating, yeah, you're going to see some real good action. And, of course, Netflix,
yeah, that's up big again. Now, if you believe in patterns out there, one of the things I showed folks at 9 o'clock, I've got the ES Mini, the daily ES Mini,
yes,
which has or is very close to making a 1.272 butterfly.
Okay, cool.
Well, if you go back and you take a look at it, the last time that we made a 1.272 butterfly was coming into September 14th. So I've got one that's shaded in green, one that's in yellow. If you go back further, coming into the highs back in March of 2012, it made close to a 1.272 butterfly, 1.128. If you go back further, it made a 1.272 butterfly on a smaller basis coming into May of 2011. You take it back further, it made a 1.6. So, you know, if you believe that patterns repeat themselves, there's all kinds of signals out here.
That's crazy,
We're going to see
man.
some type of retracement. I know.
Let's go over to that small cap then. The small cap has not stopped. So what is that small cap doing? Let me see, because, man, we hit that small cap really good when we were going on that Go Long America tour. So
yes, yeah,
let me pull
about
this.
a year ago.
Yeah.
So on the small caps, the problem is the pattern isn't really the same setup on the small caps because the small caps are up over the 1.272 level right now. That's the thing that's crazy. You know, can they really run up to 930? I don't think so.
They got their vitamins, baby. They got their vitamins. Darrell Martin, Steve Rhodes, Tom O'Brien, all you Tigers and Tigresses. Please stay right there. We appreciate you growling and proud with us. Our man, Mr. Basil Chapman's coming up next. Thanks, guys.